Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because schools aren't, so let's get started. So are you questioning if you should get into stocks, start making some money over there in the stock market, getting a little risky, a little spicy? And that's exactly what this video is going over, guys. Should you invest in the stock market? And the overall answer is yes, and sometimes no. Now, for me, guys, I love the stock market just because you're able to grow incredible amounts of wealth over the long term, and you don't necessarily need to do much work. Now, obviously, yeah, you do need to put research into it, but after that, it's a waiting game. So the stock market is great, and there are a lot of reasons why to invest in it. However, there are a few reasons why not to invest in it. And it's not because that it's bad or anything, but because you could use your money for something else. We are going to be looking at it from both sides, mostly focusing on why we should invest in it, because it is a great investment for the long term. But we're going to look at from the no perspective as well. But we're going to start with the yes, because everyone wants to. We got to get the blood flowing. So let's first focus on yes, we should invest in the stock market. And I cannot stress enough for the long term. When I first started realizing being a millionaire, everyone wants to be a millionaire. But that idea is yeah, good luck with that. But then I started learning about compound interest and how you're able to grow it over the long term. If you start younger, it's easier. And if you continually do that, you could become that millionaire fairly easily. So it is super possible, especially with the stock market and using compound interest to your benefit, to grow into not only a millionaire, but a multi-millionaire. So that's why I love it. The key to that, again, is the amount of time that you do it for and consistently doing it. Now, again, with the stock market, with the long term, we got to look at the crash or stock market crashes overall, but especially 2008, because that is the most recent one. Now, we got to talk about this because everyone talks about losing money in the stock market, right? Well, in 2008, there was a stock market crash, the Great Recession. A lot of us probably lived through it, even though if we didn't realize or remember it. But stocks did take a 50% drop, in the area of 50%. So if you had $1,000 in there, yeah, you now have 500. But, and there's a big but, that if you got out at the bottom, you did lose money. However, what a lot of people do not realize is that if you stuck with it, if you stayed in the market, that rebounded. So you not only got your money back, but you even made more money. You probably more than doubled it at this point. So yeah, if you held on to it, you didn't lose anything. So the stock market is a roller coaster, guys. It has its ups, it has its downs, but you only get hurt as if you get off of the roller coaster. And that is why in the short term, stocks are risky. It has its ups and downs. You don't know what it's going to do. It's a gamble if you're looking at it within a couple days, couple months, or even a couple years. For the long term, though, that's what I'm talking about. So you might be interested in getting in it just because you want to have great stuff for your future, right? Well, what about this research? How much do you have to put into looking into whatever's out there? Well, here's the thing. If you're actually interested in doing that type of stuff, of actually doing your research, looking at different companies, looking at different stocks, then you could do very well with it. But if you're not interested, which a lot of people might not be, you can still invest and make money. everyone is interested in money. Not everyone's interested in doing the research. So there is something that you could do, which are index funds. If you don't want to do much research, remember the term index funds. I will save you a bunch of time, research, headaches in the future. Index funds. What basically an index fund is, it follows the market. Whatever the market does, it mirrors it. Versus something else, if you choose individual stocks or let's say other funds, a lot of them try to beat the market. All these professionals try to beat the market when a lot of them fail at that. Kind of going on the idea of, if you can't beat them, join them. So just mirror the market and you'll do fine, especially because index funds have very, very, very low expenses. A lot of mutual funds, they might look fancy. It's like, oh, you'll beat the market, but their expenses are higher because they're trying to beat the market. But in reality, they don't, and expenses eat into your returns. Overall, follow the market. If you're interested in doing research, I say go for it. But if you're not, definitely go for those index funds. But the billionaire Warren Buffett, he suggests them, and so do I, if that has any type of value. I think it does, but it's super easy. And speaking of super easy, for me personally, I have an automatic withdrawal from my account, like my savings account, and it goes into the stock market every single month. So the first of the month, it goes from my savings and goes into the stock market. And you do that automatically every single month. And that's called dollar cost averaging. So through the months, the stock market could be up, it could be down. And a lot of times we're not smart enough to get in at the absolute bottom. And we're not smart enough to get out at the absolute top. That's called timing the market. It's very difficult to do. Obviously, we all know, if it's at the bottom, buy in, and when it's at the top, get out. But actually doing that is very difficult. So instead of doing that, you dollar cost average every single month, and for the long term, it goes up, and you're gonna win. So that's looking at the yes side of it, of you should get into the stock market. But now let's look at the other side of why you shouldn't. The first main reason is if you need the money. If you need the money that you're investing, guys, do not invest in the first place. Because if it's in the market and God forbid you actually need it, then the market's in control. Like, you would have to pull that out. Usually it's in a time that you wouldn't want to. Maybe the stock is lower than you expect it. And you would normally hold it for it to rebound, but you need the money, so you pull it out. So overall, you should use extra money to invest in the stock market so you don't have to worry about it. And I would first suggest setting up an emergency fund. Now, I talk a lot about emergency funds just because it's important to have a cushion, right? That what happens if something happens? It's like, oh shit, I need money for that. Don't worry, you have some over there. You could call it your oh shit fund. But if you have that cushion on the side, then it's a little bit more comforting. And an idea of an emergency fund would be, let's say, like 1 month's worth of expenses. So if anything happens, you have something to fall back on. And another way that I cannot stress enough, instead of investing in the stock market, we should invest in debt. Not getting debt, getting out of it, paying debt off. So a reasonable average return of the stock market in history, guys, is around like 7 to 10%. And it's not guaranteed. Obviously, it could be less than that, it could be more than that, or it could even be negative. However, if you have debt on, let's say, a credit card, that interest rate could be 10, 15, 20%. So if you pay that stuff off first, it's like you're getting that in return. If you have a 20% interest rate, you pay it off, you don't have to pay that anymore. So it's like you're getting 20%, and that is guaranteed. I'm only paying interest, guys. So the math simply states if you get a 10% in the market, which is good, but if you have a credit card of that 20%, I'd rather put it to the credit card. So in the end, it really is up to you if you still are interested in investing in the stock market. I do have another video going over how to invest your first $1,000, and I'll leave the link in the description for you to check out. So if you have any questions, comments, concerns, guys, I'd love to hear what you guys have to say. You can leave those down below. And don't forget to subscribe to my channel, Real Life Money, because we talk about real life and money, because not many people do. So thank you so much for watching, and I'll see you in the next one.